Lafarge Africa recorded a 3.9 billion naira loss in the first half of 2018. In the same period in 2017, the cement manufacturer recorded a 19.73 billion naira profit. Bruno Bayet, Lafarge Africa's Chief Financial Officer, joins us now to discuss the company's plans to return to profitability. So many thanks for joining us today, sir. So last year in the same period, that's the first half of the year, you had a profit, and this year things haven't gone as well. So can you just tell us a bit about what happened?
Yeah, sure. Thank you for your invitation. I would separate the results into two parts. One of performance in Nigeria and then the performance in South Africa. It's true that South Africa has or is experimenting some technical problems at our cement plant. That's why there has been, since Q4 last year, a new management team. And this new management team, we need to give them a little bit of credibility or support to enable them to implement their turnaround plan. Those actions has been taken already since end of last year. They are continuing in Q1. Now, we didn't get the benefits or full benefits of all the actions in Q2. And we had during the month of June some technical incidents that has affected the profitability of the Q2. Now, we believe that this is now behind us. The cement factory is now running, and we should see, as from Q3, improvements in the performance of South Africa, and the aim is to return to profitability by the year end. So the management team in South Africa is doing the turnaround plan, the restructuring. There's a massive transformation in mothballing activities, in doing the right actions, doing the maintenance of the plant to restore profitability in South Africa. Now, in Nigeria, we continue to deliver the very strong performance. We continue to improve from Q1 to Q2. Volume has increased. What we can say is that Nigeria cement is now out of recession. Last year, same period, Nigeria cement activity was really going down. This year we see some strong support in the markets. And we continue also our turnaround plan.
Okay.
And the performance in Nigeria is delivering. Since Q4 2016, quarter after quarter, we deliver the performance.
Okay, so looking at some of the other line items on the earnings, there was a twofold increase in finance costs. Tell us about that and how you're planning to rein that in.
Yeah. So as I said, what we can say is that we have two types of problem. One is South Africa. The second one is our leverage. So we have the very strong support from our parent company, Lafarge Holcim, in deleveraging Lafarge Africa. And this will enable us to further improve our profitability.
Okay.
And give more visibility on future dividends, and furthermore on our capability to grow in Nigeria, which is for us an important market, and we believe in the future of Nigeria. Now, I mean, and we do that through investing in debottlenecking of activities, investing in power plants. We have a ready-mix activity, and I don't know if you're very familiar with ready-mix, but yes, we deliver ready-mix in Abuja, in Lagos, or in Port Harcourt. It's something which is very convenient for customers, and we have, as industry leaders, the expertise to provide services to customers. So strong performance, but leverage affecting our profitability, and this is why we have the board has approved, and it will be submitted to the shareholders to do a rights issue of 90 billion naira. Okay. That will enable us to deleverage the company and improve our profitability.
When do you expect this to be ready? End of the year, Q4 2018?
The whole transaction will be completed before the year end. We should expect to have an EGM by the end of Q3 and rights issue taking place beginning of Q4.
To repay short-term Nigerian debt, is that
exactly?
Okay.
And working capital, yeah.
Okay, so earlier you spoke about energy, and that's something that I feel a lot of people in the world are interested in because of global warming and all of that. So you have an energy improvement plan. and that has gone a great deal to improve your performance in Nigeria. And I'd just like to hear a little bit more about this, because one of the things in the note that I read was that you were exploring alternative energy sources.
This is for us a key differentiator. We have a very strong expertise in able to use alternative fuel, whether it's rice husk, industrial waste, plastic, tires, and those items, those alternative ways, we can burn them in the kiln, and they are improving our energy sources and optimization of the cost of energy. Okay. So this is something we have the technical capability to introduce more alternative fuel.
Okay.
Our aim is to continue to introduce more alternative fuel in our production, whether in the west or in the north or in the east.
So let's look at the entire industry as a whole. Recent developments. We know that the likes of your competitors like Dangote Cement, Bua just brought on more cement into the market. So now we're actually producing more cement than we need. And there's been talk about whether or not prices are going to come down. We know that the vice president has called on producers in the country to bring down prices of cement. But we also hear talk about how the cost of production is still high and could keep those prices where they are right now, even though we're seeing more supply than demand. What do you make of all of that?
Well, first, cement industry is not a matured industry. In the last 10 years or 15 years until 2014, the market was growing at about 10% per annum. And Nigeria has, especially now that the oil crisis seems to be behind us, or we hope that it is behind us, it means that with the population growth, or more urbanization, need for more infrastructures, and you can look at cement is going everywhere. You need to build a power plant, you need cement, you need to build a bridge, cement, roads is leading to cement. So you need cement in all the aspects of development, and therefore there's the need for cement is expected to continue to grow for quite some time. So there is room for growth. There's still overcapacity at this stage, but as the cement industry continues to grow at a premium to GDP growth, then we catch up, and we will need to invest in future in new plants in the near future.
Okay, Bruno, we'll leave it there. Thank you so much for talking to us.
Pleasure having you
on the show.
Okay.
That was Bruno Bayet, CFO of Lafarge